I'm a writer with Fintech Nexus, and with me today is Rebecca Green, the co-founder and CTO of Regal.io. Hi, Rebecca. Why don't you start off with telling us a little bit about yourself and about the company?
Hi, Tony. Thanks for having me. I'm Rebecca. I'm the co-founder and CTO of Regal. So Regal is an outbound phone and SMS sales solution built for B2C brands to drive more conversations with their customers and hit their growth goals way faster. We are a Series A funded startup in New York. We're about 2.5 years old. We serve 150 plus customers across B2C categories, where a digital self-serve only flow isn't sufficient for converting customers and growing. So that includes consumer lending, but it also includes healthcare, insurance, education, et cetera, those kinds of things. And I actually started my career in fintech, or in financial services, I guess, in fixed income trading, and then consulting to really large banks. And the goal of that consulting was to help them improve their customer experience and use technology to do that. And I found that at least traditional banks were not really that interested at the time in actually improving customer experience with technology. It was all about how do you deflect customer inquiries, lower the cost to serve with technology, which was a little disheartening. So I ended up becoming a product manager at Amazon for a company I thought was innovating on behalf of consumers and using technology for that. And then had an opportunity to join an early stage startup called Handy after that to help bring the home services industry online. So I got interested in how do you bring these considered purchase categories that are more complex online, had seen what it looks like in retail at Amazon, but it's very different for these other kinds of categories. And was chief product officer there for 6 years, and we sold the business to Angie's List. And then my co-founder and I, who met there, started Regal to help bring all these other categories online and build software to help them do that.
Okay, great. Interesting few months in the markets. Tell us what you're seeing and what your clients are telling you.
Yeah, so we see, just yesterday, rates or the consumer price index coming down a little bit, but still, 2.5 times where the Fed targets. So certainly our expectation and what we hear from customers in the consumer lending category is that they don't expect rates to, it's probably going to not rise anymore, but they don't expect it to come down very much. And this is kind of the new normal. And hence the topic of this is, well, what does that mean for consumer lenders? If you're in a higher interest rate environment and that's kind of sticking around, you have to find other ways to compete rather than price, right? Because there's fewer people who can afford that new home or the new car because they can't afford the loan, and certainly refi opportunities are less. And so what we hear from our customers, the way they think about that is, if everything is, rates are low, everything is growing, you kind of participate in the growing pie. You don't have to do much to compete, not that they weren't before, but when it's not all up and to the right, you have to differentiate in other ways. And mostly we see them trying to differentiate more on service and building trust with their customers. And so we see budgets moving not entirely away, but more from where they used to be, which was all top of funnel. Like, how do I pay on all the different channels to get leads to my site, and moving more and more towards conversion and helping customers actually convert lower in the funnel and even retention. And so that's really where we see those customers moving and their focus.
It's funny you mentioned trust. That's a really ongoing theme of what I've been hearing about the last 2 days here as well. Another thing I've been hearing about is digital transformation, lots of buzz. Go beyond that a little bit for us and tell us real life examples of what you're seeing and how you can see it affect change in the businesses you're dealing with.
Yeah, so, digital transformation is a very loaded word. I think the way that I interpret that is, how do you use technology to know your customers better, understand them better and what they need, and move more from a product-led or product-centric motion to more of a customer-centric paradigm. And I think kind of 3 ways that we've seen our customers go through that transformation. So the first thing is being where your customers are, and that's the most obvious one. And more clearly customers are online and even mobile. In our data we see across all of our customers, 70% of their sessions or traffic start on mobile as opposed to even on desktop web. But it's not just enough to have mobile apps and an online presence. we see like dramatically different experiences under the hood of like how easy it actually is to transact on different websites. It's easy to build the site on top, but if you have a ton of legacy systems behind the scenes and you're trying to transact, whether it's a loan or it's a deposit or whatever that is, it varies dramatically between bank to bank, lender to lender, in how fast you can do that, how easy it is to do that. And I think, not that this is a consumer lending example, but the whole world just saw that with what happened at Silicon Valley Bank when all of these startups needed to go find a banking provider very quickly. Logically, they should have all gone to JP Morgan or the like, but it was actually really hard, and we had to go through this. It was really hard to set up an account at JP Morgan. It's not that they don't have a website, right? It was just hard to get the account approved, to get dollars into the account. And so that's why, Mercury and Row Banking and others have taken more of their fair share from that moment. So anyway, the first thing is being where your customers are and making things easy. I think the second thing we see in digital transformation is knowing your customer. Traditionally, it was actually easier to know your customer when they were in the brick and mortar, sitting by you, and you were building a relationship. And so the way that customers in online banking try to get more information is using data, right? So they invest in CDPs, right? A consumer data platform that tracks all of the online prospect behavior, centralizes it into a single unified customer profile, and then they federate that out to all the different systems that are deployed along the customer experience, right? And all the touch points, so that you have a single source of truth about your customer. And then the third thing is they have to activate that data for certain use cases to make the experience actually better for customers, right? So where Regal helps them do that is in proactive and more personalized sales and marketing outreach at points of friction along the consumer lending path. So whether that's new loan starts or loan completion rates or loan conversion rates, we help in all those areas. But certainly customers are using that to decision faster, to price credit better, to identify fraud more, right? It's how they use that data to actually serve customers better and grow revenue.
You touched on data. There's also a question people want to ask was lots of discussion about the use of alternative data in identifying new customer segments, but you've also achieved strong results by using new data techniques with your first-party customers. Can you discuss that a little bit, please?
Yeah, so when I hear alternative data in a lending use case, it's usually you think about anything that's not on the FICO score or the credit report, right? So I've heard everything from, do they pay their Netflix bill, to their social media behavior and how can I price credit. So it's not that our customers don't use that kind of data, but what we find is that when they connect their CDP or whatever their source of all of that consumer behavior data is that they get from customers, which tends to be more first-party data, they can connect that to Regal. They can shower us with all of the real-time data. And so think about every email open, every click, every article they've looked at on your site or in your help center, every step they've taken in any of the onboarding flows or application process or whatever that is. You can use that data to then, decide who's high intent, where are some people taking longer than average to complete a particular step? Did they hit a bug in your site or an error, right? And you can use that data to reach out to them more proactively using Regal with calls and texts and human conversations in those moments. So that's kind of how we think of first-party data and how that can be activated. We find, honestly, when customers do that and they start using Regal, there's such a gold mine of opportunity of customer segments they've been abandoning or not really connecting with people in the right moments or things like that. And they can test all of that stuff with us. So once the data is there, they can actually say, A/B test, what's the right channel to reach out to whom, at what point, with what message or what conversation to have over the phone. And that unlocks huge value, right? We see customers in the lending category driving 25% increase in loan completion rates, similar in doubling or double-digit growth in loan value that they close. So that's kind of one way. That's what we use is we call our Journey Builder product. And the second thing, way that we use first-party data to help customers is a product we're currently building that'll be out soon, but it's unlocking what is the ultimate first-party data asset from conversations, the actual phone conversations, transcribing those, tagging those, and doing two things. Automatically filling out CRM data or customer profile data from those, so you don't have to worry about agent compliance or not knowing like what actually happened on the call, right? So that's one thing. And the second thing is using that data to then continue to power journeys, meaning what's the next best action? So if you're a customer and you just had a conversation and you're talking to SoFi, one of our customers, and you're talking to one of their agents and you mention, oh, I'm also considering Chime and I'm considering Bank of America for this car loan, and these are my buying hesitations or whatever you say, like that should decide what is the next email that you receive and what's the content of that email or what's the next ad you see or what's the next SMS or conversation. That doesn't have to all be in Regal, but just using the ultimate first-party data asset, what you've said on that phone conversation, and making sure it's in every single system and then the right next best action happens. We feel there's just a ton of opportunity still in that.
Rush to digital, some neglect the importance of human interaction. Can you share some, or especially key touch points rather, can you share some examples of where you've been able to inject that or reestablish that and some of the successes it's led you to?
Yeah. So the most, I guess, salient example that we heard when we were starting this business, and this is in the financial services space, it's not necessarily a lending example, but is traditionally in brick and mortar, when somebody walked into the bank and wanted to open an account, 90+% of people would have funded it on the spot, right? And today online, funding rates are 30%, something like that, right? So of course, being online has massively increased distribution, but banks only make money when the account gets funded, right? So they have a real challenge. And why is that? So first of all, banking products, but also consumer lending, like deciding to buy a new home and who your lender is going to be, that's a really big, important decision and complex, right? That's not a frequently made decision. It's high consequence to get it wrong. It's lots of decision makers in your household potentially that are participating in that conversation. And so, it almost trivializes that decision to think that you should take some sort of digital self-serve only flow like the way Amazon has famously gotten to one-click checkout and apply it to that category, right? Because it makes it feel like it's not an important decision. And so that's why rates online are so much less, conversion rates are so much less. And behind the scenes, it's like, if you think about it, they're on their phone, right? They're looking at 4 other competitors. You have very little real estate on their phone to convince them with your site of why you're the right partner. And once they leave your site, what are you going to do? Your chat widget doesn't help anymore. The content on your site doesn't help anymore. Email rates have 2% response, and you can't really have a conversation on email. So is it, what's the channel that's going to win? Is it going to be SMS, the AI bot? Is it phone? In our experience and what we see when testing with customers, we do SMS and call. So we're not just one channel, but we see 10% response rates on SMS to continue to participate in the conversation. We see 30% answer rates on phone. And it's not a random phone call, obviously. It's again, it's personalized based on the actions and the behavior someone was taking. It's actually branded. It says SoFi or whomever, BMG Money. And that just leads to a better conversation. And the moments where that's most valuable, that's not to say digital self-serve is bad and you shouldn't use technology, you should. But the moments where it's most valuable are moments of friction. So it's where there's documents that need to be added. There's another human being that needs to get involved in the decision. There's an integration step where I need to connect systems. Those are the classic moments where you see the highest drop-off, and an actual personal conversation to build trust and help you through those moments. Just has a ton of, we see, again, 25% improvements in those at a, call it 5 to 20, depending on the business, X ROI.
I can try to go through the slide and see if there's any questions here. Does anybody have any questions about what we've talked about or anything related? Or no? Okay. How about we do have a couple of moments that you had brought up SoFi earlier. Can you maybe share some case studies or examples of some of the ways you've helped brands that we've probably all heard about?
Yeah, so SoFi, I'm sure most of you guys know, it's one of the largest neobanks and started out in student loan refi, but is a partner now across all banking services for their customers. And they work with us particularly on the student lending part of their business as well as personal lending part of their business. And they focus on a couple of different areas of the funnel, but one of the key parts is loan completion rate and then loan conversion rates. So less about like loan starts, but mostly how do I get the people who have started the loan application to actually complete, and then how do I actually convert that loan? And some of the numbers were from them, right? So I think I don't have the exact numbers, but double-digit growth in completion rates, very high single-digit growth in loan conversion rates, and the most interesting, I think, finding from their situation is that they also saw double-digit improvement in the loan value that they were closing. So by actually getting on a phone and talking through the use case of what the customer was trying to do and be able to evaluate them with more information, they actually found the loan value would increase from those conversations as well. So that's one example, SoFi. We work with a bunch of varied kind of lenders. Valen is another one that's more in the mortgage servicing and lending space. And their use cases, they actually, they're loan officers, and this is a very human thing to do. Humans on their own aren't perfect, and data on its own and machines aren't perfect. And they found that, the loan officer would kind of cherry pick, right? They have a bunch of leads come in, but they would kind of cherry pick which ones they thought were going to convert, spend all their time on that, right? And so when we're talking about an environment where you need to grow and you don't want to cherry pick only, you want to think about other pockets or segments of customers that you can actually try to serve. They might be more challenging to serve, but it's worth investing, pricing that risk, and figuring out how to serve them if possible. But if there's a human there who's used to just like converting the easy people, then it's that doesn't go very far. So they've used Regal for one of those reasons to basically say, look, we're going to use data. We don't want to not empower the loan officers, but we want to kind of take the decisioning and make sure out of their hands and make sure like Regal is actually helping us reach out to all the people based on their data who we think are potentially good customers and ensure that gets served to the loan officer so they actually follow up on it.
Great. Well, I see we're just at about the end of our time, but I'll give one more chance for questions there if anybody has any. No? Okay, great. Well, thanks for coming by, and the next session should be up in a few minutes. Okay, thank you.
Thank you.